Hello everybody, this is Lara at pureelliottwave.com. I am going to analyse Ethereum with you today. I last analysed that back in December last year, so it's time to update it. Before I get into that, I have two questions for you. First question, well, the first one is a vote. There are links below in the description box. Click through the first link to this vote and tell me which markets do you want me to analyse next on this YouTube channel for you for free. There's quite a few options here to choose from. Ethereum's one of them, but I'm doing it today, so maybe don't vote for that. Maybe vote for something else. Everyone gets one vote. Please don't try and change your IP address, because I can see if you're doing multiple votes, and I probably won't take that into account. But vote for, even if your vote is an unpopular market and yours is the only vote, voting for it still keeps it on this list, because after another maybe one more vote, if no one's voted for any of these over 3 votes, I'll take them off the list to make the list a little bit shorter. So click through that link and vote. What do you want me to analyze for you next? I've got one other question. There's a link also for this in the description box. When you've done your vote, could you come back and click on the second link and tell me what stage are you in your Elliott Wave knowledge? This will help me when I'm going through my Elliott Wave counts to know how much detail I need to explain and how I need to explain it. If I've got mostly beginners watching my content, then I need to aim to inform them in a way that's going to help them learn Elliott Wave. And I'm also wanting to create some free learning content on my website, and I need to know what level to pitch my content at so that it's going to reach most of you according to your stage in your Elliott Wave knowledge. Okay, let's jump into some Ethereum analysis. My last analysis of Ethereum in December last year, I was expecting a final low for the bear market, and I had a target at 986. That didn't happen. I had a bullish alternate wave count that expected the low was already in November, and now that's looking much more likely. So today, my main Elliott Wave count is bullish, and I'm expecting a really strong bullish run. The strongest bullish run we've yet seen for Ethereum, I expect, is ahead in coming months, maybe a couple of years away. It will take its time. It will move with strong volatility when it's got upward movement, but it will still have deep corrections along the way. That's absolutely normal behavior for these markets. I have a possible target for primary 3 within cycle 3 of just over 54,000. That's a conservative target. If that number is wrong, it's probably going to be too low, and I really don't like trying to calculate targets for cryptocurrencies. I prefer to use my Elliott Wave count in conjunction with technical analysis to identify when the third wave may be over. And I expect it's in its very early stages. Someone made a comment that, could I please highlight the structures I'm talking about rather than use a pointer? If anyone can tell me a kind of video recording software that would do that, I'd love to hear it. I haven't been able to find one, and I think this pointer is pretty big, yeah? And I made it a different color, like it's really easy to see, guys. Okay, this is the monthly chart. This is the full price history of Ethereum. I'm now using crypto compare data, but it pretty much agrees with Yahoo Finance data. From the inception back here in 2015 to this high here in 2018, for Ethereum, I can see a very good looking 5-wave impulse. I probably need to fix my labels of intermediate 1 and 2. Intermediate 1 should be here, intermediate 2 should be down here. Within this impulse, I see primary 1 over here, primary 2 a very deep double zigzag, primary 3 an impulse, primary 4 a shallow triangle, and primary 5. I've got a lot of notations on this chart. This is how to read them. Within cycle wave 1, I'm noting the length of primary 3 in relation to primary 1. Primary 3 is 19.36 times the length of primary 1. This is not a Fibonacci ratio. I'm just noting how long this third wave is in relation to this first wave, because this is important for target calculation in future waves. That's why I'm doing it. I'm also noting that primary wave 5 is $81.51 longer than 2.618, the length of primary 3. Now it looks like it's shorter, but that's because this is a semi-log scale. It squishes up movement at the top of the chart and expands movement down at the bottom, and you have to view these markets with extreme volatility on log or semi-log scales. The only reason I'm using semi-log, not log, is that's the option I've got in Motive Wave. I don't have a full log option. So just note that this fifth wave travelled nearly 3 times the length of this third wave, and it did it in a fraction of the time. This is the strongest and longest portion of cycle wave 1. That's really important to understand and really get into our heads, because I'm looking for the end of cycle wave 3 for my eventual profit taking point. And I bought Ethereum back in 2019, so I'm still holding on to that, and I want to exit at the end of cycle wave 3. And I want to get the gains of primary wave 5, not just primary wave 3, but it also depends on how long it takes to get there. And so cycle wave 1 over here is an impulse, cycle wave 2, a deep double zigzag, is a 94% correction of cycle wave 1. Again, you can't see how very, very deep this is because of the scale, but these bear markets are extremely deep. From this low to this high, I'm now labeling this as the end of primary wave 1 within cycle 3. You can't label this cycle 3 and cycle 4 because cycle 4 may not overlap cycle wave 1 price territory. Primary wave 2 is an 83% correction of primary wave 1. It's over 80% of market value lost in this bear market, which I expect now was over in November. I expect this low is sustained, but I expect primary 2 is most likely over back here in 2022. This wave count is extremely bullish. It's expecting a third wave at primary degree within a third wave at cycle degree. The strongest portion of an impulse for these markets is the fifth wave though, not the third wave. So I'm going to look for primary 3 and primary 4, and then I'm going to be looking for primary 5 to be even longer and stronger than primary 3. I will expect primary 3 will take its time. It'll end probably with a blow off top and vertical upward movement for 2 to 4 weeks. And then another bear market for primary 4, which probably won't last as long as this bear market for primary 2. And then a short, sharp, volatile blow off top for primary wave 5 to come. And I'm going to be using these previous lengths of third waves and fifth waves within cycle wave 1 and within primary wave 1 to guide how long I expect primary 3 and primary 5 to be. Within cycle 3, primary 2 may not move beyond the start of 1 below 82.05. I'm drawing a best fit channel around this bull market. I'm drawing the upper edge from this high to this high and pulling a parallel copy down on this low. For any continuation of any bear market, I would expect final support at this trend line, so I wouldn't expect price to get right down to this point. Let's take a look at the first weekly chart. This low, the end of that bear market for cycle 2, is this low down here. The structure of primary wave 1, it is extremely likely to be over at this high. I do have an alternate charted which sees primary 1, intermediate 1, 2, 3, 4 and 5. I'm not going to publish that today. I judge that to have a really low probability. I know it's a really popular Elliott Wave count out there, but I think this is much more likely, and I already have an alternate which is bearish. So I only want to give you one alternate, not two. Just be aware, I am keeping track of that other idea. I keep it charted, and I may publish it again in future if I need to. For now, let's try and keep the number of charts to a manageable level for me and for you. Primary wave 1 I expect was over up here. Primary 2 fits really well as a double zigzag at lower time frames, so that's what I'm going to label it as on this chart. It's an 83% correction of primary wave 1, so a normal depth between 80 to 90% is pretty normal for a bear market for cryptocurrencies. Ethereum's not usually that extreme, but this is pretty normal for Ethereum. Where 2 ends, 3 begins. Now this is a possible target for primary 3. This is a Fibonacci ratio, 11.09. Primary 3 would reach 11.09 the length of primary 1 at 54.226. But if this target is wrong, it's not going to be high enough because this number isn't long enough. Look at the length of primary intermediate 3 to intermediate 1 here. It's 15.32. times the length of intermediate 1. Minor wave 3 here is over 4.236 the length of minor 1, so this is a lot shorter. And when we look at the higher time frames going back to the monthly chart here, intermediate 3 is 18.24 times the length of 1, primary 3 19.36. So those waves within cycle wave 1 were more extreme than this. So that's why I say if this target is wrong, it's too conservative and not high enough. But this is a reasonable Fibonacci ratio for Ethereum, so it's a possible target. I really don't like calculating targets for cryptocurrencies, and I'm not using this for my own purposes. I'm really just giving this to you because everyone keeps asking me to do it, so it comes with the strong caveat. It's just one idea. I don't have a lot of confidence in these targets. It's a bit of a stab in the dark. I'm going to use Elliott Wave plus classic analysis, volume analysis, and strength analysis to identify the end of 3, not necessarily has it hit the target or not. Within primary wave 3, I expect intermediate wave 1 is incomplete. I didn't want to label it over down here. I think that's too short. When intermediate wave 1 is complete, then another bear market for intermediate 2 should last several weeks, and will probably be a very deep correction of intermediate wave 1, probably in the 70 to 80% the length of intermediate wave 1, lasting a few weeks, and it may not move beyond the start of 1 below 896.109. Let's take a look at the daily chart. This low down here and this high up here. This is the high. This is the end of minor wave 1. So I'm just going to look at the structure of minor 2 and the beginning of minor 3. So here's the end of minor 1. The end of minor 2 is a double zigzag, and the start of minor 3. Within minor 3, minute 1 and 2 may be complete. Minute 3, an incomplete impulse. The strongest portion of it, I expect, is extremely likely to be minuet wave 5, and so this is quite strong upward movement. I expect a further increase in upward momentum, and I expect minuet wave 5, when it gets underway, to be the strongest portion of minute 3. I expect minuet 5 to break above resistance at the upper edge of this channel. Going back to the weekly chart, I'm drawing this channel from this high along this high and pulling a parallel copy down to sit across these lows. Strong overshoot here for the end of the bear market. And here's the upper edge. This is, I have not bottom lines, but I have two things I'm looking for confidence in this wave count. If we see a full daily candlestick of upward movement, an obvious green candlestick, not a doji, not a red candlestick, if we see a solid green candlestick above this trend line and not touching it, that's my definition of a trend channel breach. If we see that, I would have reasonable confidence in this analysis. If we see a new high above 2030.19, I would have further confidence in this analysis. So according to your management of risk and your idea of how confident would you be in my analysis or not, here's a couple of things to look for. And it doesn't need to be a close, it's just a new high by any amount at any time frame. That's because Elliott Wave works on highs and lows. Elliott Wave doesn't work on open and closing prices. Within minor 3, minute 4, when it arrives, may not move into wave 1 price territory below 1350.33, but I would expect minute 4 to probably find support for a pullback to test support at prior resistance at this trend line. So after a breach of this trend line, look out for price to curve down, test support, and then move up and away. That would be very typical price behavior. On the weekly chart, what if primary 2 is incomplete? It could be incomplete. It will subdivide as an incomplete double zigzag. First zigzag in the double, intermediate W. The double is joined by a relatively brief shallow 3 in the opposite direction labelled X. This looks like a typical X wave within a double zigzag. And now intermediate Y may be an incomplete zigzag labelled minor A, B, C. Minor B to continue higher. Let's look at the whole structure of minor B here from this high. This point up here, here's an impulse for minor A and an incomplete expanded flat for minor B, labelled minute A, B, C. Expanded flats, flat corrections, are labelled A, B, C, and they subdivide 3, 3, 5. Within an expanded flat, the B wave moves beyond the start of wave A. Here, I think this is a 1.21 length of minute wave A, and that's within a common range of up to 1.38. So this is a common structure, particularly in a B wave position, and within the structure, its B wave is within a common length. So this wave count is absolutely valid. I am just judging it to have a lower probability. Minor B may not move beyond the start of A above 2030.19, and so the rule is absolute. A new high by any amount at any time frame, a fraction of a cent on the tick chart, immediately fully invalidates this wave count, and that's why a new high above this price point would give me substantial confidence in the main bullish wave count. And so even if this alternate is wrong, and this is one reason why to do Elliott Wave properly you should be using alternates. Even if your alternate is wrong, even if you judge it to have a pretty low probability, it's still really useful, because if you can see at which price point that alternate, which expects the opposite direction, is eliminated, that gives you more confidence in your main wave count. So you can use them as confidence intervals, if you like, in order to give your main analysis more confidence. What would we need to see a new high above this price point? Within minute wave C, no second wave correction may move beyond its start below 1074.40. On the weekly chart, we see the end of the last huge bull run to all-time highs up here, and I expect now this is probably the end of the bear market back down here. Lows are really hard to find for cryptocurrencies, because when you look back at their previous price history and you look at their previous bear markets, those movements that are like 70 to 80 or 90+% reduction in market value, that's a bear market, and they've had quite a few in their overall bullish run. They have a bullish bias. In those bear markets, if you look really carefully at those lows, and I've spent hours poring over charts looking at them, some of those, the movement up off those lows doesn't start to show strength, real strength, until quite a ways after the lows. The initial day or week right up off the low and next following few weeks can actually be quite weak. There are a couple of things here telling us, though, that this last completed week is now showing quite a lot of strength. It does have push from volume. We've seen some push from volume up in here. We've saw some good strong volume up in here. And comparing this to this major rally here within this bear market, this volume in here was actually quite weak. This is quite light volume. This movement in here and in here is now starting to show some real strength off lows, telling us that the low probably most likely was in back here, but I still want to consider the alternate idea. What if it isn't? What if the bear run's resuming? So I have that alternate wave count for you. Support 1070 is holding. We've got a couple of tests here of support, a little double bottom with some bullish long lower wicks coming up off here. There was a hammer candlestick pattern back here, and now we're seeing strong bullish candlesticks on the weekly chart. On balance volume doesn't exhibit divergence on a closing basis. It has a small narrow range it's in, no signal at this time, but if it breaks back above resistance here, that would be a bullish signal. RSI is neutral, so is money flow, so is stochastics. At the lows down here, Ethereum on a closing basis isn't exhibiting bullish divergence, but importantly, RSI reached oversold back here. When you look back at Ethereum's price history with RSI, it had reached deeply oversold once before, but that was the very, very beginning of its price history. And since the movement into that strong bullish run up to the 2018 high and subsequent bear markets, it hasn't reached oversold again until now. So that's actually pretty bullish. So all of these are neutral. ADX is declining. There's no clear trend. The positive DX line has just crossed above the negative, telling us there is a potential trend change to up. But here it's based on a 14-week average, and with these pullbacks within this movement, and it's essentially sideways, it's going to take a while for ADX to catch up if there is a new bull market, a new upward trend. ATR declines throughout the bear market and during sideways movement up off the low. Pretty normal behavior for these markets. This is one reason why I expect that the low was probably in further off to the left of the chart back in November last year, because we're starting to see this curved shape with slow beginning, acceleration through the middle, explosion at the end. This upward movement looks very much like a bullish run within a bull market and not necessarily like a bounce within an ongoing bear market. And I'm going to go back through Ethereum's price history and show you what I mean. So here is the end of the last bullish run up to the high, just over 4,800, and this is the start of the bear market. Look at price behavior within these bounces within the bear market, and this is the biggest bounce. Look at this. This doesn't have that curved J shape. This is a pretty strong bounce within the bear market. This is a bear market rally, a really good one, but it doesn't have that curved J looking shape. And here we've got some sideways consolidation, a downward breakout, and now it's starting to move up off those lows. It doesn't start to have that curved J shape in here. This is just a straight up run here, but now we're seeing this shape, and this is why that looks to me more bullish than bearish. This is the previous bull market run. We don't see a curved shape in here, and this is the bear market of cycle wave 2. We don't see any of these bear market rallies having that curved J shape. We see consolidations, triangles, downward breakouts. If we go back to within cycle wave 1, we can see quite a few examples of that curved shape. Here's a beautiful one coming up out of a triangle. Within this fourth wave triangle, these rallies, they don't have that curved J shape. But once you move into this, here's that nice curved look. Slow start, acceleration, explosion. And then within primary wave 3, we can see quite a few examples. Here's a beautiful example, this nice J shape here. Within primary wave 1, we can see another one in here, and we see it in a really big way here. And so for that reason, because of the look of this, it's got that curved J shapes, slow start here, acceleration, explosion. That to me looks very much like a movement in a new bullish run and doesn't look very much like a bear market rally. They have a different look for these markets. This is not definitive. It could be a bear market rally. We could see lower lows. The bear market may not be over. I'm talking about a balance of probability when I look back at the price chart and what am I expecting to see if this is a new bullish run. I hope that makes sense. Some people don't seem to understand that this is an exercise in probability, not certainty. And I'm also doing this for my own investing purposes, not just to help you guys out for free. There is some volume pushing price higher, and range is now starting to increase with this upward movement. This is really good to see for a bullish run. Look out for next resistance about 1,700, and also look for resistance at the upper edge of that channel I've got on my Elliott Wave charts, daily and weekly charts. Look out for resistance there. I'll expect a pullback before a breakthrough and then a back test of support. On balance, volume gave a bullish signal here. That could be resolved now with further upward movement. No new range, no new signal. ADX is now above 40 and it's above both DX lines. If it reaches 45, it would move into very extreme territory. So it tells us there is an upward trend at the daily chart level. The trend is just now extreme, but when you look back at ADX and the price history of Ethereum, ADX can get so much more extreme than this. It can reach over 60, so we're not in major danger territory of this trend ending yet. RSI and money flow are both overbought, but this usually, well, back in cycle wave 1 to 2018, RSI reached overbought quite quickly and early on within that bull market. This is easily resolved by a small correction and then it can reach deeply overbought again. Only when it does this multiple times and exhibits long-term bearish divergence with price would the bear market rally be in danger of possibly being over. Stochastics also overbought, but when a market is trending, we use RSI, not stochastics, and we've been over ATR. That's all from me with a thorough analysis of Ethereum for you today. Please don't forget to let me know where you are in your Elliott Wave knowledge level, and don't forget to vote. What markets do you want me to do next for you for free on this channel? Thank you so much for watching, and thank you for your support.